All right, welcome back to Market Day Report. I am Scott Shelby, otherwise known as the Cow Guy. Thank you very much for tuning us in. Getting it done here, wrapping up the week. Boy, and what a week it's been. Even though it's been short, it's been long. I bet you can sympathize with that. The market's trading kind of tired today, although we do have a lot of algos and a lot of high-frequency trading. Sometimes you can just tell the humans behind it all are just getting kind of tired, and that's how it feels today. Let's see what's going on in corn. Let's take a look at that corn market. We'll bring up that corn board from behind my fat head, and we're 8 3/4 cents lower in SEP. 4.90 1/4 is last. We're about 3/4 of a cent off the lows of the day, and that'll give you an idea about where we're at because we're about 13 cents. It's a 13-cent range, and we're about a penny off the lows. That's exactly how it looks right here. The new crop Dees is 9 1/4 cents lower now, below that $5 line. 4.97 1/4 is last. That's a penny and a quarter off the lows, and we've had about, a 13-cent range. So that'll give you a good indication about where we're at with this market. And let's go to the soybeans. They're 14 1/4 cents lower in that August contract. 14.34 is last, and that's about, 2 1/4 cents off of the lows. So that's also in a 20-cent range. So, again, that will give you a great idea about where we sit. No, the new crop's down 17 3/4 cents. 13.21 3/4 is last. That's a penny off the lows, and we've had a 23-cent range. So there you go. That'll give you an idea. How about Chicago wheat? The wheat in Chicago, that's off 1 3/4 cents in that front month SEP. 6.56 1/4 is last, and that's to the upper end of the middle end of the range. And it's been about a 20-cent range, 19-cent range. So that'll give you an idea there. Where Dees is 3.5 cents lower to 6.73. All right, moving right along from Chicago, let's go to Kansas City and take a look at the hard red. 17 cents lower there, and SEP to 8.26 3/4. Well, the Dees is off 16 1/4 cents to 8.28 1/2, and we've had about a 22-cent range over there today. So that'll give you an idea. We're 5 cents from the lows. So that's lower quarter of the trade. That's hard red. That's Kansas City. Let's take a look at spring wheat in Minneapolis. 4.5 cents lower there. 8.53 1/2 is last. That's in the middle of the day's range. The Dees is 4.5 cents lower, and 8.16 1/4 is last there. So that's the wheat products for you. We'll finish up here with cotton, and we'll get to our next guest analyst, but it's higher. It's 114 points higher. 81.02, now that 81 line's in play. 81.02 is last in that Dees cotton. Let's now move along to our next guest analyst, and that's going to be Todd Horowitz. He's with Bubba Trading in Las Vegas. Todd, thanks for being on the show. All right. Boy, what a week it's been, even though it's only been 4 days. And do you get the feeling, I know there's a lot of ETFs and high-frequency traders and a lot of algos, but it seems tired to me.
Love the jacket, Scott. I tell you, I think the markets are tired. I think it's been, you and I talked about this early in the week, that it was just it's a holiday week still, and we don't really have a story to tell. And I think if you look at the volume, you'll see we're at about half of normal volume right now, which makes it harder to push. I think looking at crude oil, which is another commodity that is pushing higher and looks like it's getting ready to maybe break out to the upside, which could help propel the grain markets as well. So, but I mean, overall, it's a really dull, quiet market, which in typical dull and quiet markets, equities will drift higher and commodities will drift lower.
So any thoughts on what we're going to get from the government next week? I mean, I'm sure when we come back on Monday, there's going to be a little bit of jockeying for some position there.
The real problem with government numbers, Scott, is that nobody talks about the adjustments they make the next time they come out. They're really not that accurate. I mean, the price action itself tells you, and right now, as you stated, the market just appeared tired. They don't seem to want to move too far. I think they've once again tried to attempt to put lows in, and hopefully these lows will hold, and we'll see some more steady movement. I don't think we're going straight up, but I do think there's an outstanding chance, depending on other factors, that we could start to at least steady and start to move higher at a slow pace.
Was that our one chance to get some stuff hedged if we didn't do it the first time, or do you think we're going to get another chance come around soon?
I think we'll get another chance. Again, we're going to have some pretty big swings. I think there's some pretty big shorts out holding these markets and trying to step on them. And when we do get enough news or enough buyers to switch them and force them to cover, that'll give you a chance to hedge at higher prices, I think.
All right, we'll take that on board. Stay with us. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz. He's with Bubba Trading in Las Vegas. We'll be right back. All right, welcome back. Let's take a look at the livestock, the proteins, the meats, whatever you want to call them. We just want to know the price, right? Let's bring up that live cattle board from behind my fat bald head. Here we go. August is up. This is a good board. $1.97 higher, 176.55. Just a tick off the highs, folks. That'll give you an idea of where we sit. We've also got over a $2 range. So yeah, that's a good indication of what's been happening over there. Dees is up $1.10 to 182.72, and that's a new high. That's where the bell would have come in handy right there, right? How about feeder cattle? What do we have happening over there? Well, they're adding to the real estate to the upside. This is good. August is up $2.20 to 244.47. That's a nickel off the highs, folks. We've got Nove up $2.05 to 249.85, and that's about 7 cents off the highs there. So a strong board in feeders as well. Moving right along, lean hogs had the fronts down and the backs higher. Still is. August is down $1.35, 95.77 is last there. That's kind of in the middle of the day's range. But as you go out the deferreds, let's go out to the Dees. That's up 37 cents to 76.37. All right, let's bring back in Todd Horowitz. He's with Bubba Trading in Las Vegas. Todd, anything jump out at you when you take a look at these livestock prices?
I think that cattle's probably reached its highs. I mean, you should, if you're not hedged, you should be up here. And I wouldn't give up the potential upside, but I would certainly make sure I protect the downside here. I don't think there's a heck of a lot of room to go. You know, these are all-time highs. We're right around there. We continue to kind of vacillate in this area. And I think hogs might have put in the highs yesterday to buck. Again, as we go out the curve, right, in October and December is always less expensive. And I think that they may have seen the peak as well here. I would, not negative, but I certainly would be hedged at $1 or somewhere near there because I don't think there's a lot of room to go to the upside from here.
We had a hot jobs number yesterday, not so much today, but if we do see these interest rates go higher, what does that do to some of these meat prices?
Well, I think it brings them lower. The higher interest rates don't help anybody when you have a lousy economy with nobody making any money. The real problem is the earnings don't keep up with the cost of the the hikes, and that's a bigger problem. You never in the history have we seen a Fed hike rates into a recession.
Yeah, I mean it's difficult. We're going to talk about it on the Cow Guy Close tonight, 1 Central, 2 Eastern, cheap plug. But yeah, I mean there's some things out there. I mean we've got Chapter 11, filings are going through the roof. We've got foreclosures. We've got auto loan delinquencies. I mean there's a lot of things out there that are telling me what you're saying is that the economy isn't doing very well, and if they continue to raise rates into that could kind of put a damper, a little bit of a black cloud on some of these livestock prices, right?
Well, they're slowing the wrong thing, right? We know that there's two types of inflation: government-driven inflation and regular demand inflation. And this is government-driven or Fed-driven, and it's not good. Right. It has to be. You can't control it manually. You have to let the prices discover themselves, and the markets will find a fair price if you just let them trade. And unfortunately, the Fed is not letting that happen.
All right. Thanks for your content. Always appreciate it. Have a great weekend. That's Todd Bubba Horowitz with Bubba Trading, Las Vegas. We'll bring it back here to Music City, Music Row.